G'day there, welcome to the Alpha Wave Trader weekly update. Just going to look at the week ahead in the S&P 500 because it has been a pretty exciting old week last week, and I'm also doing a bit of education in these updates as well, and I think the S&P 500 is just a great tool for doing that as well. If you did read and have a look at the video last week, I did a bit of work on sort of buy and sell pivots, giving you a bit of a sense of how important they can be. And this week I'm going to look at distributions in price and sort of how ranges develop and why they develop. But I'll start out by recapping on those buy and sell pivots, looking at the S&P 500. And you can see here we have a quarterly chart of the S&P 500 going back to 1997, and if I just take you through, this is 20 years of data, and we just pick out the buy and sell pivots. I do actually have them programmed in there with those diamonds, you can see, but the programming doesn't pick out every one of them. It's just one of those quirks of programming. It can be difficult to pick them out exactly. So let's just go through and catch the ones that it didn't pick out. And you see here we've got a new high back in 2000. Then we had the quarterly sell pivot here. Notice the price action that occurs after it, going back up into that sell pivot. And then we had the sell-off into 03. And then we have a new low created here. The buy pivot, you can see on that green diamond. And off we went to the upside. And you'd be tracking all of these highs all the way along. As I've said before, looking for the sell pivot is you need a close below the low of the highest candle. And we come across here, we've got that new high. There's your black diamond, picking out the sell pivot. Notice the price action after the sell pivot candle into the crash. Then we have this lowest candle there. There's your buy pivot candle picked out. Off we go to the upside again. Now this is a sell pivot there. That didn't end up working out. That was in 11-12, so that was kicked off with that European debt crisis. And things got fixed up with the Mario Draghi, "I'll do whatever it takes" comment. And then we have the buy pivot through here. So there's your low, and there's your buy pivot candle there. Notice the price action after the buy pivot candle. Big rally. Again, we had that sell-off 15 to 16. Got a sell pivot candle there on the quarterly. Again, notice the price action after the sell pivot candle, the fact that it did go back to retest the bottom of that sell pivot candle a couple of quarters later. Then we have a buy pivot candle there. Again, notice the price action after that buy pivot occurs, and off we went to the upside again. And here we are right now, coming into December. So at the end of this month, if we do close below the low of last quarter, you're looking at a sell pivot candle. And if you've looked at the last 20 years of data, I'd say you're definitely pricking up your ears at this point, especially after such a massive rally since the crash, all stoked by central banks. And we have the ECB saying they're backing off at the end of this year, and the Fed still trying to hang on to their view of continuing to raise rates. So it's very interesting times, and I think that's why we've got such volatility at the moment, is that fight around the bottom of that quarterly candle. So we could still rally and close above the bottom of that candle by the end of this month. If that happens, we don't have the sell pivot on the quarterly, and prices could rally again. If the sell pivot is confirmed, then we still have opportunities to wait for things to occur after the sell pivot has occurred, which can give you great entry points, especially if we get carry on, just huge opportunity, and you often get the retest at least of the bottom of that candle, which is another little hint for you there. Now, I wasn't going to just focus on the pivots. I just wanted to recap on last week and show you very long-term data to give you a sense of how important these pivots are. I'll show you a chart of the S&P on the daily in a minute. I just wanted to start off by just going through a bit of theory, just to give you a sense of what we're going to be looking at. Now, we have a big uptrend, and then you get a fairly sizable pullback, and my sort of view is that a lot of the price action that comes after that is actually referenced by this pullback that occurs. So as prices develop from there, and whatever starts to occur, you can actually make calculations off that initial pullback. And there is a point of control, which is the midpoint for me of that. Sorry about that writing. And you'll see all this on the charts in a second. There is the point of control, which is the midpoint of that range, and that's where the great bulk of trading occurs. But there are also key levels of support and resistance within the range, which will continually be hit. And if you understand what to look for, all of a sudden the way that these ranges develop makes sense, and you start to find opportunities within them. And the levels that I look for, which are internal within these distributions, is the same levels I look for within trends as they develop. And the retracement levels within trends and also within ranges that I look at are 75% to 87.5%. So we know, or I'm sure many of you know, that 75% is a sort of Fibonacci retracement level that not a lot of people in the market really focus on, but it really is key. But what I'm saying is that it's actually this area that is really key, 75 to 87.5% retracement. And if you go to the opposite side, it's 12.5 to 25%. So you'll see me talking about these levels many, many times, and you'll see them on my charts. I'll show you in a second. And when you start to see that these are the key areas, both within trends and within ranges, you really do start to find a lot of great opportunities that other people aren't finding. And I've been talking about these buy and sell pivots, and so if you start to understand that shift in direction can be understood through these buy and sell pivots, you start to know when prices are turning back up. And if things start occurring in your key zones, you're starting to find some pretty good opportunities. So if we now switch to the S&P chart, this is a daily chart. So this was the big sell-off in January. Now, all of the price action that's happened subsequently, I'm saying is related to this initial pullback in January. So we can actually make calculations off that and start to look for opportunities. So if we go through and look at this price action that's occurred since, and look at the relationship to the what I call the buy and sell zones within that range, you can start to see that a lot of the price action that occurred does make sense. So this area, the sell zone, which is this range here, as you can see, 75 to 87.5% I've got there. And then down here, the 12.5 to 25%. So that's the red marked area and the green marked area there. And if we have a look at what prices did, you can see hitting that 75% exactly. And a major point I want to make is this point of control becomes like a gravitational point around which prices are oscillating. And once you are stuck in that range, you'll see prices revert back to that point of control over and over again. And again, that will be something that we'll use for opportunity and for profit taking, etc. So looking at the price action since January, we have the sell zone there back to the point of control. Rallied, sold off, didn't quite make it to the buy zone. Back to the sell zone again, rejected all the way through to the buy zone. And you see a bit of price action occurring within that buy zone. Then back to the point of control again. Sold off again, off the 75%, tried to make it back, but sold again, finding good support in the buy zone. Back through to the point of control, maximum indecision at this point. Up to the sell zone, rejected again, back to the point of control. Then it actually went for a rally and got rejected up near that the top of the sell zone there a couple of times, but managed to hold in there. And the point to be made here is we see prices breaking out above the high of the range. And what occurs in that instance is a lot of the people who would have been bearish after this January sell-off would have been possibly getting short through this area. Their stop losses would be arranged above the high of that range, and this price action would have gone up and taken a lot of those people out. But once that period of stop losses going off and tempting people to get long finishes, it will return to the distribution, I call it, rather than a range. I can explain that another time. But once it does return to that distribution, the target becomes, of course, the point of control. And you can see very quickly prices collapsed once that period had finished and there wasn't any buying follow through. A quick collapse to the point of control. And then the price action since really has been just from the sell zone back to the point of control to the buy zone, back to the point of control, sell zone, back to the point of control, buy zone, sell zone, and here we are right now. So all of this price action now makes sense. Also, if we look at how waves develop, we can also use that to our advantage by looking at this development of waves here. So in looking at a trend, if prices are developing in an uptrend or a downtrend, and we're looking at each wave in that trend and looking for those buy and sell zones for opportunity, and also making a definition that if prices do close back below that previous wave low, that trend is possibly under threat, we can see quite clearly the development of this trend to the downside, while also responding to the range from January, is also reacting to the current downtrend. And all of this price action, you'll see, even though it's volatile, it never took out that initial wave high. And the selling occurred within the sell zone of this next down wave. So there's this down wave, which was the next wave down in this current downtrend from the high, and the sell zone of that wave coming in around where the market sold off from, and again occurring in this area, creating a sell pivot on the daily and getting hammered. So if we were to quickly look at what could happen from here, quite clearly this low would be a break of this low would be a continuation of this current downtrend, but prices are going into this very key buy zone area. So we can't be surprised to see prices sell off, look absolutely terrible, and then still revert back to that point of control. Still a key risk, which is why chasing the market in these situations is so fraught with difficulty. If we're looking at the major uptrend long term, we can see that we haven't had a break of the most previous highest low within the uptrend. Once that occurs, then things really do start to look interesting. And again, we haven't had the quarterly sell pivot yet, but we're getting close. So things are close to looking very dangerous in the US, but we haven't had the confirmation yet. And until we do get a failure below that low from January, we can't say that the uptrend is potentially over. And even though could break through that low, you're often going to get a retracement before carrying on. So that the people who try to get short, on the break, they usually get into trouble on these retracements within the wave. So you're usually waiting for those retracements into the sell zones of the waves before you're getting too excited. And so just looking at it from this point of view, this is looking very dangerous, having just been rejected from the point of control so quickly. I'd expect to see prices try to nudge below this 2603 low in the S&P, and that is very dangerous. I certainly wouldn't be selling it short there because it is just so fraught with difficulty, with the chance of it rallying from there. So for me, it's seeing how it trades around here, checking whether it's going to break that January wave low, but then looking for the opportunities if they occur in the sell zones of the current down wave structure, and also looking at the sell zones of this whole distribution. So there's plenty of opportunities to come, but you just have to respect all the different facets of how these waves develop. So hopefully that has made a little bit of sense. I'm sure it's so early on that it may be confusing, but I will continue to release these updates on Mondays, so check back in next week and we'll see how things develop from here. Cheers.